This is Commodity Wrap. I'm Tony St. James. Well, here we are staring down the grain markets and red again. Red for corn, red for soybeans, red for cotton, red for, well, spring wheat. But I did find some positives here. Turn higher for Chicago wheat. After 6 sessions lower, Chicago wheat moving higher. After 3 sessions lower, Kansas City in higher territory. I'm trying to find positive things here for Brian Hoops, President, Midwest Market Solutions. Brian, I don't know anything else to say. What can you say about the grain markets?
Hey, I appreciate you trying to find something positive, and it is very hard, and it's very frustrating, I'm sure, for producers to listen to it when there isn't positive news in the grains at this point in time. But I guess if there is one positive, we slipped below $4 in December corn. We traded there most of the session. Funds were sellers of at least 5,000 contracts, but there was some buying interest that pulled us off of our lows by about a nickel, and we closed back above $4 mark by the end of the day. So that's a minor positive. I think there is some bargain hunting coming into the marketplace. I don't think there's anything to get excited about. That if anyone's thinking that this is the low day, I don't know that we can say that. There's no evidence to say that, really. If you look at the spreads or you look at anything else, any other metric, doesn't really scream that there's a bottom in this market. But it was encouraging, I think, to find out that there is some buying coming into the market below the $4 mark. It's probably commercial type related that they're stepping in and getting some coverage extended. But I guess that's the most positive thing you can say about today's trade activity.
Yeah, and again, who knew at the time we were making highs back in mid-February? I mean, we're not going to know when the highs are in. We're not going to know when the lows are in till they're in, right?
Well, yeah, right. Until you get some evidence of something taking place, as spreads maybe start telling us that story, or you get some sort of reversal day. But really, you have to have something that gets the funds out of being comfortable being short and selling every rally. And I don't think today's action is enough to do that. It's it's nice to see, but it doesn't really change the trend or change anything in this market. So unfortunately, we probably are going to be limited as far as how much upside potential we have, especially when you go into Tuesday. And I think a lot of the trade is anticipating we are going to see a really big number for corn yields on Tuesday morning from the USDA.
Now, there's 2 sides of this. Obviously, a big crop is going to be, there's price pressure there. We see that. But at the same time, as a grower, I think it's a shame that you're hitting a grand slam with this crop, but your reward is lower prices. That it seems counterintuitive a little bit. Am I wrong?
No, you're not wrong. It's kind of that supply-demand balance. There's basically 4 markets that farmers sell into every year. One is where you have, like this year, a big crop but low prices. Sometimes you have a small crop but high prices. And if you're really, really lucky, you have high prices and a big crop. But that doesn't happen very often. And sometimes, you get tailed, or you don't have a big crop and you have a year like this where prices are low. That's kind of the extreme. Either have, a big crop with low prices, that's more moderate, that's more of a normal pattern. There's a lot of years where we produce a lot of corn here in the United States, and prices are much lower by harvest time than what they are during the spring planting time frame. That's kind of why, the old rule of thumb always had been, when you get your planters out of the bin, that's a good time to be making sales, buying puts, because that's seasonally a higher time of the year than when you're getting the combine out of the fields. That's usually when you're putting in something closer to a low.
Okay, we did see bean oil move higher. It's been in the red for the week, pretty much even for the month, but 33% gain year to date. Again, settling higher on Wednesday. Is that really the bright spot in all of this?
As far as the grains go, yeah, I think that is the bright spot for at least this time being. It's had a little bit more fundamental news. It's had some strength from a technical standpoint. The funds have really stayed away from the sell side of bean oil and gravitated towards the long side of it. And because the technical trend's been higher, so that has alleviated a lot of the selling pressure against bean oil futures this year. We saw a little bit of a bounce today. Probably could see more upside as this is really the one darling, the one bright spot as far as the grain markets go.
Okay. Now, I did find some markets moving higher. Want to come back and tee those up for you. Brian Hoops is president, Midwest Market Solutions, special guest today on Commodity Wrap. This is Commodity Wrap. I'm Tony St. James, midweek. Our special guest, president, Midwest Market Solutions, it's Brian Hoops. All right, Brian. It was kind of a tough segment there, that first segment. We were focused on row crops, and, well, we've seen beans drop below 10. We've seen corn drop below 4. And we've been watching pressure really in a wheat market where 6 straight sessions of lower trade in Chicago, but it turned higher on Wednesday. Spring wheat going lower for the 4th consecutive session. But we get over to the proteins, and now 4 straight sessions higher for live cattle, for feeder cattle. Hogs moving lower, breaking a 5-day winning streak, but still, you look at the year-to-date returns here, 21% gains for live cattle, 29% higher for feeders, and hogs up 34%. Again, this has been a great sector to, if you're in it, right?
It's been a great sector, especially for those cow-calf operators. You know, I have, down in our country here in southwest Missouri in the Ozarks, there are a lot of cow-calf producers in this area, and they have been doing very well. A lot of our friends and acquaintances here in this area anyway, it's been great for them. They don't have that expense of buying an expensive animal. They've had plenty of grass to graze on this spring, a lot of moisture, and so it's been very good, really good prices to sell into. And so great opportunity for them to grow and expand their herds. The problem is we have not seen any suggestion whatsoever that our herd size are expanding. If you look at heifers as a percent of total slaughter, it's still increasing. We're not retaining those heifers yet. We have a lot of grass, a lot of grain that could be grazing that could be done, but there just isn't the animals, I think, out there to take advantage of it at this point in time. So this market, I don't think is done going up yet. Probably has some more upside potential. We really have done a great job of narrowing the spread from a situation where cash was much higher than the futures were for most of this year. Now August is on par with today's close with last week's cash trade at 236. If we can go to 238 or 239 this week, then August has some more catching up to do. But you look at October at 229, almost 230 by the close. It's only a $6 discount. We're back 4 months ago, it was a $22 discount. So those futures have really started to come up and narrow the discrepancy. And if we ever get futures above the cash, then we can maybe start talking about some hedging, selling opportunities for the cattle producer.
You know, I'm trying to remember, I don't have it right in front of me, but we had I want to say, is it a feeder cattle contract that one of the deferred contracts is trading at a premium to a couple of contracts in front of it? Why would we see one of those deferreds trading in as far as a premium? Is that a normal thing we would see?
Not normally, and I don't really see any of the deferred contracts trading premium to our cash markets or to our front month. We see August and September both trading premium to our cash markets. You know, you look at our index that was posted today, it was around 336, and we closed at 344. So there's an $8 premium the futures are carrying to the cash. Now that may start to attract some selling. We've had such a big jump in the demand for animals at the feed barns this entire summer. Maybe that starts to slow down. We can start to see some selling pressure, but those deferred contracts, October, November, January, January's trading at 333, a big discount to the front month cash and to the index. That could signal that the market's anticipating we'll have lower prices by next January, but really we just don't see the heifer retention to suggest that prices are going to come down sharply anytime soon.
Yeah, and again, probably would help if I had the markets open in front of me right here. What I do know, though, is we look over at some of these outside markets, and, well, we've seen some interesting moves. Gold, lower. Silver moving higher. Energy markets, WTI, lower for the fifth straight session. We're watching RBOB move lower, 5 straight sessions. Nat gas moving higher. Are you watching some of these outsides as well?
Yeah, the crude oil had a pretty good bounce early this morning and had an inventory report that showed a small drawdown in the stocks, but couldn't sustain those gains. Now we're well off of session highs. We're 94, almost $1 lower after being almost $1 higher this morning. Certainly corn isn't getting a lot of help out of the crude oil market this summer. Of course, our administration wants energy prices to be lower. It helps the economy when consumers are spending less on gas, diesel fuel. They can spend more on the economy, have more money to spend on groceries, that sort of thing. So they certainly want cheaper fuel prices, and I think we're going to have that, especially by the fall, if we can get past some of these headlines and war issues with Russia. India, we're putting tariffs against India because they're buying Russian oil. There's a lot of reasons to think gas prices, energy prices will come back down. Meanwhile, that stock market just seems to keep bucking higher, having another solid day today. And, there's a lot of talk now that we will have a cut in interest rates. There's a higher percentage chance that rates will be cut, which should bode well for the economy.
Okay. We want to visit with you one-on-one. How do we find Brian Hoops?
You can reach me at direct number 417-501-5132, and our website address is MidwestMarketSolutions.com.
President, Midwest Market Solutions, Brian Hoops on Commodity Wrap.